Very, very, very good morning, friends. Now we will go for another test paper. Now we are analyzing a test paper belongs to December 17. My dear friends, very interesting question is, this is the question we discussed in the last video, that is June 2017. June 2017, what is the first two question in your FM? If you just analyze, this is the first two question in your FM. The same question is asking next year also. See, they ask the same question. Current ratio 2.5. The small change 2.5 current ratio. Fixed asset to proprietary ratio 0.75. Same question. Reserves and surplus. And they are asking the same. Even statement of changes in working capital. So that means in the previous video we did these two questions. So I am not going to repeat these two questions. See, number also same. If you take number 60,000, 90,000, here it is a smaller number. But number everything same. That is format everything same. Just a number only change. Since for ratio analysis, not even changing the number. So you can able to understand the same. Because of the reason, I am not doing this two question. We'll proceed to the next question. Okay. So that is why I told you, any FM question paper is a predictable, my dear friends. First two questions. First question will come from ratio, fund flow, or cash flow. Out of these three, two. Confirm. Now coming into eighth question, that will be from working capital management. First question. So here it is coming the question from working capital, and here B part also is coming from normal method of EBIT method. Normal method of what? EBIT. EBIT, the normal what we discussed the same. So from this question onwards, we will start. Hope all of you are ready. Okay. So we are going to discuss question number 8. See, question number 8 is all about receivable management. Receivable management. So this is your study material ditto question only. We discussed in the classroom also. See, receivable management, you can do two things. One is your statement route. Sales, less cost of goods sold, bad debt, admin expenses, opportunity cost. You will get what? Net benefit. If which option net benefit is higher, that is the best option. Yes or no? Another one method is called incremental method. This question in your study material is done under incremental method. So in the classroom also we did in the incremental method. You can do both the method. Both the methods same answer also. You can refer the class video where we have discussed both the method. So here for time savings we will do under what? We will do under, come on my dear friends, we will do under incremental method. Here we can save fast. Incremental method means what is the savings, what is the cost. Savings is more good, cost is more bad, reject. Clear? So with your permission I will read the question. Jai and Karthi are regular customers of MJK Calcutta, have approached the sellers for extension of a credit facility, enabling them to purchase goods from MJK Limited. On the analysis of past performance and on the basis of information supplied, the following pattern of payment schedule emerged in the regard of Jai and Karthi. Schedule is given at the end of 30 days, 15% of the bill, 60 days 34, 90 days 30%, 100 days 20%. Non-recover is what? 1% of the bill. Jai and Karthi want to enter into a firm commitment for purchase of goods worth rupees 50 lakh. So the sales is for how much amount? 50 lakh. Delivery to be made a equal installment on the first day of each quarter. The price per unit of the commodity is 150, where the profit you will get what? So the question is very clear. You will get a profit of what? 5 rupees. It is anticipated to take up the contract for recurring expense of what? 5,000. If the opportunity cost is 24,000, would you make the commitment or not? So we have discussed that we will do under incremental approach. We will do under incremental approach. So here one side we can make it incremental profit. Another side, you don't want to do one side. You can go with what? Incremental profit. Another below after that you can go for incremental cost. So what is your incremental profit? Incremental profit is nothing but the question itself is given. You are going to get a profit of what? 5. So how many units you are selling? Units you are selling is 15 lakh divided by selling price is 150. Selling price they mentioned 150. So how many units can you tell me? 15,000 by 15. If I am not wrong, is it 10,000? So what is the incremental profit? Incremental profit is 10,000 into 5 rupee. You are getting what? 50,000. How 5 rupees? 150 you are selling. You are getting a profit of what? That's all. So your one side your profit is what? 50. Now you have to identify your cost. We'll go for one cost. They have mentioned one cost called recurring cost. What is the extra recurring cost? What is extra recurring cost, my dear friends? Extra recurring cost is 5,000. Then generally every time coming one item, bad debt. Bad debt, how you will get it? Bad debt is 1% of the bill. What is the bill amount? 15 lakh. So 15 lakh into 1%, you will get what? 15,000. You will get what? 15,000. Now point number 3, none other than opportunity cost. This opportunity cost only now we are going to do now. Opportunity cost. How to do, my dear friends? We have separate sets. See, your payment is how many months delay? At the end of 30 days, you are getting what? 50% of pay. At the end of 30 days, you are getting what? 50% of pay. So, first, how it will be? 15 lakh into in that 15%. You are going to get when 30 days. What is opportunity cost? 24%. That's all. This you have to keep it for each level. 50 lakh into 15% into 30 by 360. Why 30 by 360? Normally this percentage will be the headcount. So what will be the number? You will get a number 4,500. Is it over? No. Now second. What is second? 15 lakh into what is the percentage? Next percentage is 34%. How many days? So my dear friends, you have to check in the question whether to take 360 or 365. You can take either of the days. If question specifically tells 360, then you have to take 360 only. If the question specifically tells 365, then you have to take 365 only. If nothing is mentioned, you can take 360, you will get a round number. If you are taking 365, no problem, that is also correct. If you take 360, question is not mentioned, you can give a note that you are taken as a 360. If you check the suggested answer, I think they might have not be taken 360, they might have 365. Okay, likely they are also taken 360 only. Likely they are also taken 360 only. So shall I continue? Now we'll proceed to the next question. What is the next question, my dear friends? Yes. Given below the statement of assets and December, you have to find out the weighted average capital using balance sheet valuation. The following. Balance sheet valuation is nothing but book value. Balance sheet valuation is nothing but book value. So they have given 8% debentures were issued at par. All interest payment are debt and equity debt are currently at 12%. Short-term loan carries at what? 18%. Shares and debentures of company are quoted at stock exchange market. Equity shares at rupees 14. Debentures at 8. 98 is the debentures. The rate of tax may be taken at what? 50%. So how you have to take? It's very easy. We can go for, I will give the flow. Statement of changes in working capital. That is your statement of weighted average cost of capital. How to go? Capital structure, amount, weight, after tax cost, weighted average cost of capital. So what are all the item, my dear friends? Equity share capital. What is the amount? 4 lakh. Then reserves and surplus in 2 lakh 16. 8% debentures. 1 lakh 70. Can you please complete? How to proceed, my dear friends? We have to go for weight. Total of the weight has to be 1. So 0.482, 0.313, 0.204. The total of the weight has to be 1. Now you have to find out. See, if KD, how can you do? Interest into 1 minus tax. 8 into 1 minus tax. What is the tax percentage, my dear friends? 50%. See, this market price is given for confusion. If you are doing book value method, market price will not be considered. So you will get what? 4%. Now you have to find out K only. See, growth rate is not given. So normal method only. That is K is equal to dividend by net proceeds into 100. Net proceeds means your book value. So what is the dividend, my dear friends? Dividend is 12%. So dividend will be 100 into 12%, which will be 12. What is the net proceeds book value? You can go for book value. Net proceeds is not good. You can go for book value. How can you get book value? That is 4 lakh plus 2 lakh 60 divided by how many number of shares? 40,000 shares. This is your book value. 6 lakh 60 divided by how many shares? 40,000 shares. 16.5. See, in your material, they made a point that all equity up to date of dividend is 12% is not, that is 0.2. Actually, they made it like that here. You see this they have taken 12%, accordingly they adjusted with the 10. So they have taken only 1 point. So we'll go for the same way. So what will be the amount? 1.2 divided by 16.5 into 100. You can convert into 7.28. 7.28. So book value is always easy. Don't want to take much struggle on the same. So what will be in the number? You got, sorry. That's all. Answer is all. What is the answer, my dear friends? So maybe when question is looking, they are given big number, but answer is very small. Maybe for confusion only they have given all the other data. If you see the question, they have given lot of data like a short-term debt, this market price, investment, current asset, all are given for confusion. We have to focus only on what the data available required for your cost of capital computation. Other data we don't want to mind. That is, we can ignore the same. Now we will go for the B part. Again, capital budgeting. So you can understand, my dear friends, the trend is same. Though in FM we have learned the chapters like capital structure theory, we have learned the chapters like dividend decision. The number of questions, if you analyze EBA, TPS, ready for this point, financial break even, those questions are coming very, very less. But that may come sometimes, but not always. When it comes to B part, ZZ has 4 potential projects with initial investment of what 50 lakh. The capital budget for the year will only allow the company to take up only one of the 3 projects. The given discounted future cash flow, which of the project they should accept. So similar to our last question, investment is 15 lakh. Every year same cash flow. Discount rate is given. Since it is similar to our last question, I am not doing, because how we did in the last video, the same way only this question also. That is, you have to go NPV, and T factor. The same way you have to do. Here, all the 3 year same cash flow. All the 3 year same cash flow. There is no twist on CFAT also. So how easy the questions are coming. You have to understand it very well, my dear friends. If you understand, then it will be very, very easy questions. So take your own time. You can be able to make it. Okay. Thank you.